Hi everyone, I'm Raul Harad, CEO of DeepSafe. Welcome to another stream. Today I wanted to talk to you guys about predictive trading and artificial intelligence in cryptocurrency trading. Um, but before I do that, I wanted to look back at one of the topics that we discussed earlier this week or last week, I believe, which was the launch of ETFs for Ethereum and Solana, and of course Litecoin as well, which happened this week. So if we look at the data in terms of Ethereum first, what we see is that the ETFs pulled around $380 million within the first 24 hours. So as you can imagine, that of course has had a huge impact on the price of Ethereum, and this is expected to continue. In fact, if we look at the data from the emission itself, um, we will see that there is a expected growth. And let me look at the number so that I tell you the number that I'm looking at, because it's actually quite large, and I want to make sure I get this right. Um, Yeah. So according to BitGet, they expect around $3 to $6 billion in new capital during the first year. Of course, this will create price pressure for Ethereum, which is expected to go up, and of course, it has been doing so. If you look at the market data for the last 24 hours and even 7 days. As we stand as well, Solana issued their ETFs, and today Solana is up 1.25%. And their ETFs have also attracted a significant amount of money. In fact, one of the things that we've seen accelerate these emissions is the partnership between Solana and Western Union. Um, we can see that obviously this is going to be a big driver, and it's very transformative for the industry in general. And this allows us to kind of appreciate as well what the impact is as we look at this. So in the case of Ethereum, we have now a rally on the way to 4,700 according to market predictions. Um, and we have seen activity actually for the ETFs of Ethereum outpace those of Bitcoin. In fact, if we look at the numbers, we had Ethereum post, as I mentioned, about $246 million within the first 24 hours. And during that comparable period, we saw around $202.5 million of inflows into Bitcoin ETFs. The other ETFs have been somewhat successful. We've seen the numbers move the needle for, as I mentioned, of course, Solana before. We've also seen Litecoin and Hedera issue their ETFs. Their volume, of course, has been a little bit lower, but not negligible by any means. So it is important to keep an eye on these things. So if we look at, and of course, sorry, one of the things I forgot to mention is that there are two Solana ETFs that were issued, and right now they are paying a 5% staking yield for these ETFs. So, one of the things that people asked is, what is the difference between holding an ETF and actually holding Solana? Well, the difference is that when you buy the ETF, you don't need to own the underlying asset. In other words, you benefit from the appreciation of the asset itself without having to own the asset. So what we've seen is in the first day, of the spot Ethereum ETFs, we saw $106 million, and that has grown up to the number I mentioned, and this was as of yesterday, October 29th, which is today in the US if you're there. Um, One of the other interesting things to note is, and I want to give you the numbers for the other ETFs and how much they have pulled in because I was a bit surprised by these numbers. Um, Let me just see where that is. Find that for you. Um, so Litecoin pulled in roughly around $1 million dollars in ETFs, and Hedera around $400,000 in the first 24 hours. So that is a topic we had discussed in the past. I just wanted to follow up and mention it. Um, but as I mentioned at the beginning of the stream, today I really wanted to talk about how AI and crypto intersect, and discuss some of the emerging use cases like predictive trading, and smart contracts. So artificial intelligence and cryptocurrencies are rapidly converging this year. We've seen a transformation of the financial system, but also of the technology infrastructure. Their intersection is driven by three main trends. The first one being decentralized finance automation. The second one, artificial intelligence powered predictive trading. And of course, intelligent smart contracts that can learn, negotiate, and execute autonomously. Overall, artificial intelligence and crypto are basically fusing into a single intelligence financial web system. So not only algorithms power the economy, but they also participate in it. And, this is almost like a bit of what we've seen in sci-fi movies where these AI agents not only execute instructions, but also learn, and in this case, negotiate automatically. So this merger is reshaping how digital value, trust, and computation interact at a global scale. In terms of predictive trading, artificial intelligence algorithms, particularly in neural networks, are now central to crypto trading systems. Models use deep learning frameworks such as LSTM or GRU, sorry, to predict price trends and manage market volatility. So studies show that AI-driven strategies can outperform traditional buy and hold models by over 600%, mainly due to the adaptive learning and real-time decision making based on chain analytics and social sentiment. So these systems process massive data feeds, from transaction flows to user behavior, to detect trade opportunities in seconds before human traders can even react. Another trend, as I mentioned, is artificial intelligence enhanced smart contracts, which are evolving from static code to dynamic intelligent systems. And AI is enabling these contracts not only to execute present rules, but also, as I mentioned, to reason, learn, and optimize conditions after deployment. So, for example, in finance and supply chain management, AI augmented contracts can interpret natural language, detect fraud, and automatically adjust terms based on external data like market movement or sensor input. Machine learning also enhances security through pre-deployed vulnerability detection and real-time anomaly monitoring. So important for reducing hacks across blockchain systems. As I mentioned, another trend is in artificial intelligence, cryptocurrencies, and infrastructure. So the growing sector of, let's call them quote unquote AI cryptocurrencies, funds decentralized AI computation and data markets. So instead of clouds performing, like AWS tokenized systems, now lets users buy and sell compute power and data sets peer to peer. So this token economy supports distributed machine learning while preserving data privacy through blockchain verification. And these frameworks are key to scaling open AI development beyond corporate control, creating transparent and community-driven innovation ecosystems. In terms of the emerging trends, what we're seeing now is autonomous AI agents that are trading bots and DeFi agents that are earning crypto and participating in yield farming without human oversight. Data market for AI, so crypto secures the data pipelines essential for training models, with tokens incentivizing high quality data distribution. And the final one we're looking at now is decentralized AI development, which is open, blockchain based platforms that now support AI model deployment in smart contracts. And this allows artificial intelligence to run verifiably on chain. So these are, some of the topics associated. As you can imagine, it's quite impressive to see an AI agent generating passive income. So basically, you deploy these agents. Not only will they learn from the market and continuously improve their trading strategy, but they are now participating in DeFi activities that generate passive income for the users. So very interesting tool that is now coming to you and me, everyday people, no longer just for institutional investors, but tools that we can all use now for generating passive income. So basically, you put your money there, whether it's $100, whether it's $10,000, and these AI bots will optimize a trade strategy, learn, and then stake or farm your coins to generate passive income. So with that, keep in mind there's always risks. So overfitting and data bias, black box problems, market manipulation and data poisoning, and overconfidence bias and automation risk. Of course, keep in mind regulatory and ethical concerns. But so that's it for today. Thank you all for listening. If you have any questions, of course, by all means, feel free to reach out via our official social media channels or by email. We're happy to address any of these topics. Have a great day, evening, or night, wherever you may be, and we will talk next week. Thank you. Bye.